Commissioner Windmiller, we are live on Facebook. We are recording and we're ready.
Great. Thank you so much, Brenda. I'm calling the meeting to order. It's a special meeting of the Bi-State Board, Thursday, August 27th at 9:15 a.m. Ira, will you please call the roll?
Commissioner Windmiller,
Present.
Commissioner Simmons,
Present.
Commissioner Zimmerman,
Here.
Commissioner Brown,
Here.
Commissioner Pistello,
Present.
Commissioner Galladay,
Here.
Commissioner Beach,
Present.
Commissioner Gully, Commissioner Johnson, Commissioner Cox. We do have a quorum present.
Great, thank you. I'm going to move to item number 3 on the agenda, which is a resolution of the Board of Commissioners of the Bi-State Development Agency, authorizing the President and CEO to enter into a memorandum of agreement with Local 2 Missouri and Local 309 Illinois of the International Brotherhood of Electric Workers, the IBEW resolution number 1076. I would ask Jessica Roach, Talby Roach and Jessica Meffer-Miller for comments, please.
Very good. Good morning, commissioners, and thank you as always for your time. This represents a big victory for us, assuming we do get your endorsement of this contract, and it would mean that we are under contract with all of our unions at this time, which is a big victory. I want to commend Jessica Meffer-Miller, Chuck Stewart, and Virgie Chafin at their hard work and moving through this negotiation, additional with outside counsel Corey Franklin, who were instrumental in getting this negotiation completed. And with that, I'm going to turn the presentation over to Jessica to just briefly talk about the particulars. Jessica, if you would.
Thank you, Mr. Roach. Good morning, commissioners and colleagues. This contract is the culmination of negotiation that began with IBEW Locals 2 and 309 in June 2018. This contract is for a period of 3 years from July 1, 2019 through June 30th, 2022. This is the second contract that we have presented IBEW with, and it was successfully approved by their membership. Features of this 3-year contract include a 3-year increase of $1.55 million, and that amounts to a 10.73% increase over that 3-year period. Like the Amalgamated Transit Union Operations and Maintenance Contract, year 1 of the contract includes a 2.25% wage increase, while years 2 and 3 include a 3% increase. Other items of note include increases in shift differentials for second and third shift sign workers and electricians, and this is really intended to help us fill vacancies that we have in those particular teams on those shifts. And it also includes some improvements to the retirement funds for 2 different employee groups, those hired before and after January 1st, 2014. We are pleased to present this contract with you and ask for your endorsement this morning. Any questions on that contract or the process?
Jessica, I just have one question. When does the contract go into effect?
Commissioner, it's actually retroactive to July 1st, 2019. Part of the contract includes a signing bonus, a different amount for different team members for that period to compensate for the increased pay for year 1, that FY 22.25%.
Thank you. Are there
questions? Go ahead. I just want to note that our finance team under the leadership of Mark Vago is prepared to implement these financial adjustments on September 1 if this board approves this contract today.
Thank you. Are there questions from other commissioners?
I have a question, or just a kind of a, I guess, a comment and a question. I appreciate everyone's hard work on this. I know this was a long process, and the the amounts certainly look kind of in line and reasonable to me. I just, a lot's changed in the past 6 months or so, and I guess as a big picture with the kind of near-term and medium-term financial outlook of the organization, I mean, how are we, planning to accommodate these increased costs, and how does this kind of fit in with the financial challenges we're kind of forecasting in the near term. Hopefully, not longer term, but just I want to make sure we've planned for this, I guess, or we're allocating resources for this.
So, Commissioner, if I will address that, this contract is negotiated within the scope of the budgets that we have presented, along with and we will be within budget for it. And as a matter of fact, this kind of contract and stabilization gives us what we know it gives us a certainty of cost that actually helps us do a better job with stabilizing costs over a period of time, so that we can anticipate what are inevitably some adjustments that we may contemplate at the conclusion of the current fiscal year, which, as you know, just started. So they are within the general financial plans. We will be reviewing and are actually actively discussing the financial challenges associated with service. Jessica and I have specifically had this conversation along with finance and Mark Vago and Tammy Fulbright. We talk on that almost daily because we are looking very vigilantly at where the projections are associated with sales tax. And as you know, that those are key drivers as to where our service profile will be. So I apologize for the long answer, but this is just one of the elements. And actually the stability of a labor contract helps us to know what the assumptions are of those costs, that they are in line, and we should be able to make adjustments associated with what our what we will be receiving on as far as a sales tax and income side.
Other questions or comments? Seeing none, I would call for a motion to approve the contract.
Simmons makes the
Commissioner
motion.
Beach will move to approve the IBW CBA with locals 2 and 309 for the period July 1, 2019 to June 30, 2022.
Thank you.
Simmons
Second.
Simmons second.
I think we need a roll call vote.
Commissioner Beach,
Yes.
Commissioner Simmons,
Yes.
Commissioner Winmiller,
Aye.
Commissioner Brown,
Yes.
Commissioner Costello,
Aye.
Commissioner Galladay,
Yes.
Commissioner Zimmerman.
Yes.
The motion passed.
Thank you, Myra. You'll see on your agenda that there is another item, a resolution to approve a intergovernmental agreement between St. Clair County Transit District and Bi-State Development for a project extending Metrolink from Shiloh Scott Station to Mid-America Airport. That resolution and that conversation will be held off until, it will be deferred until our September board meeting. I don't think there's any comments, but Talby, do you have anything to say, or do you just want to defer that?
Thank you, Commissioner. Simply that we're ironing out the details at this time. I actually met with Ken Sharkey this morning, as I do regularly, to go over these issues. And he's having a subsequent meeting with Gonzalez Engineering, who is the Transit District's consultant, specifically about the contract. I would characterize it as looking good. We're simply having to work out the individual details. I plan to meet with him next week. I apologize just for the timing. I would have preferred to have it done a little sooner, but I think September is realistic, and then everybody will be pleased with the results.
Thank you for that comment. That was the only other item on the agenda today. I do want to thank everyone for making a special accommodation for this meeting, which was a special meeting and not one that's normally planned for our calendar year. I hope some of you or all will be able to join us for our next set of meetings, which is our operations and our audit committee meetings. But right now, I would ask for a motion to adjourn the special board meeting.
Motion.
Second.
Can we have a roll call vote, please?
A voice vote's all that's needed.
Thank you. All those in favor, aye.
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 Opposed? Any abstentions? The special board meeting is adjourned.
Okay, we're ready to start anytime. Thank you.
Give me a minute, please.
Certainly.
Thank you. Trying to get to my other document. Come on. Okay. We ready?
Yes, thank you.
Good morning, everyone. I'd like to call to order the combined meeting of the Operations, Audit, Finance, and Administration Committees meetings of Bi-State Development, Thursday, August 27th at 9:30 a.m. Myra, may we have a roll call vote, please?
Commissioner Winmiller,
Present.
Commissioner Cox, Commissioner Galladay,
Here.
Commissioner Brown,
Here.
Commissioner Beach,
Here.
Commissioner Zimmerman,
Here.
Commissioner Gully, Commissioner Simmons,
Here.
Commissioner Costello,
Present.
Commissioner Johnson.
Thank you. Do we have any public comment cards this morning?
Commissioners, there were no public comment cards submitted for this meeting.
Thank you. First item on the agenda is approval of the minutes from the May 21st, 2020 combined OPS AFA committee meeting. The motions have been provided for review by the committee.
So move.
Thank you.
Second.
All those in favor, please signify by saying aye.
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 Any opposed? Any abstentions?
I abstain, Commissioner Costello.
Thank you. The next item on the agenda is a single bid contract with Dove Equipment, the paint booth man lifts replacement. I would ask Jessica Mefford Miller to make comments.
Good morning, Commissioners. We have before you an item for consideration. We are requesting that the board approve entering into a contract with Dove Equipment for a not to exceed amount of $133,509. We're presenting this to this board this morning because initially this was a sealed bid contract, and because we only had one respondent, Dove Equipment, this has shifted to a negotiated bid contract. The item being procured here is lifts for our paint booth at our main shop facility. This is used for painting our Metro bus and our Metro Coloride vehicles and is a matter of maintaining that equipment in a state of good repair. Are there any questions about that equipment or this contract?
Seeing none, I would ask for a motion to approve.
So moved. Beach.
Second.
Thank you. Do we need is this a voice vote or is this a roll call?
The voice vote.
All those in favor, please signify by saying aye.
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 Any opposed? Any abstentions? Motion carries. Thank you. The next item on the agenda is a contract modification, a time extension of contract with Jacobs Engineering for general on-call GEC design and engineering consulting services. I think this is an item for, again, Jessica and Chris Paler.
I'm going to ask Chris to respond to this item.
Good morning. Jacobs Engineering has served as our general engineering consultant since 2016. Their current contract ends at the end of September next month. They had performed the design services for renovations to the Emerson Park building, which are out for bid now. It makes sense to keep them around to serve as the design support function for the construction phase of this project. So we're asking to extend their contract a period of 10 months to the end of July, and that will allow them to answer the submittals or approve the submittals, answer any questions on the construction phase of that project based on the design that they had accomplished. Are there any questions? This is a no cost, just a time extension. The costs for their services are already included in the project budget.
Chris, after the extension is finished, will there be what happens then in terms of a general engineering consultant contract? Do we just do those on an as needed basis, or is there someone that we keep on contract constantly?
We had solicited and received proposals for a new GEC, and I believe the board approved the new GEC contract with WSP a few months ago. So they're serving as our GEC right now. There's a slight overlap in time primarily for this project. So but WSP will serve as our GEC going forward for the next 3 to 5 years.
Thank you.
They're already under contract.
Are there any other questions or comments? I ask for a motion to approve.
I will move to approve item number 6.
Second.
Second.
Thank you. All those in favor, please signify by saying aye.
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 Any opposed? Any abstentions? Thank you. Motion carries. The next item is item number 7, which is a sole source contract for INIT for co-pilot retrofit project. And I believe, again, this is Jessica and Larry Jackson.
Good morning, Commissioners. We have before you for consideration for advancement to the full board, a request to enter into a sole source contract with INIT, that's Innovations in Transportation, for an amount not to exceed $570,000. This contract is for upgrade of the co-pilots on our automated passenger counters. These are infrared sensors located above all of our MetroLink doors. This is what we use to measure passenger boardings and alightings on MetroLink, and this is our system of record. This technology was initially installed by INIT in 2001 and is becoming obsolete and is in need of repair and replacement. This contract would allow us to upgrade those sensors so that we can maintain reliability of this equipment and ensure continuous delivery of this business critical data set. Are there any questions on the INIT co-pilot upgrades?
Thank you. Hearing none, I would ask for a motion to approve.
I will move to approve agenda item number 7.
Second.
Thank you. All those in favor, please signify by saying aye.
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 Any opposed? Any abstentions? Thank you. The 8th item on the agenda, the license agreement between Bi-State and Great Rivers Greenway for the Shoto Greenway Trail improvements has been removed from the agenda today. So we'll move to number 9, which is the memorandum of understanding between St. Louis Regional Freightway, St. Louis Community College, and Schneider National Carriers for the administration and implementation of a truck driver training and apprenticeship program. Mary Lamey, will you please comment?
Absolutely. Good morning, Commissioners. St. Louis Regional Freightway is requesting referral to the Board of Commissioners for a memorandum of understanding between the St. Louis Regional Freightway, St. Louis Community College, and Schneider National Carrier, which is a trucking company located in Edwardsville, Illinois. This is a $15,000 grant that we received from the U.S. Department of Labor. It will be used on 3 apprentices, $5,000 per apprentice. This program was created to help address the shortage of qualified truck drivers that's been identified not only at a national level, but at a local level. Our role with the Freightway as a sponsor is basically the paperwork and the electronic reporting obligations. St. Louis Community College will provide the classroom education, and Schneider Trucking will provide the on-the-job training program, which is about 2,000 hours or 1 year. Are there any questions?
I have not so much a question, but just a recommendation that, Mary, you might also want to contact in the future down the road, my replacement at St. Clair County, Rick Stubblefield, and his counterpart in Madison County, Tony Furman. Between the two of them, they manage 7 counties worth of workforce development apprenticeships for CDL truck driver training on the Illinois side. In case in the future, if this takes off, you might want to learn from their experience to maybe expand the program in the next phase if that happens. They're working together with Madison County. The 7-county Illinois region has just recently received additional apprenticeship funding from the federal government through the state. And we're getting some additional COVID relief. I keep saying we. St. Clair County and Madison County are continuing to get additional COVID relief funds for these apprenticeship related programs, including CDL truck driving training. So you may want to reach out to Rick and Belleville and Tony in the Wood River office of Madison County to learn about what they're doing. In case this takes off, there might be a phase 2 that the Freightway may be interested in.
Absolutely. I appreciate that recommendation. We'll follow through with it.
Thank you.
Thanks, Commissioner Beach. Any other comments, questions for Mary? Seeing none, I would ask for a motion to approve.
So moved.
Second.
Thank you. All those in favor, please signify by saying aye.
Aye.
Any opposed? Any abstentions? Thank you. Motion carries. I'm now going to turn the meeting over to the AFA Chair, Commissioner Zimmerman.
Good morning, everyone. Agenda item number 10 is the fiscal year 2021 annual audit work plan. And I believe we have Angie Steichoff here with us to maybe provide some context and then some comments on this and answer any questions you may have.
Good morning, Commissioners. Comply with IIA standards as well as to fulfill our obligation to the Audit Committee. We are submitting our fiscal year 2021 audit plan for your approval. Please note that there should be room in this plan for any additional items that our new Chief Audit Executive may want to add after they are hired. And I'm open to any questions that anyone might have.
If there's no questions, I guess we'll go ahead. I'll request a motion to approve agenda item number 10, the audit work plan.
So moved.
Second.
All those in favor signify by saying aye.
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 Any opposed? Any abstentions? All right, that passes. Agenda item number 11 is the Bi-State Safety Oversight 2019 Annual Update. And I think this is informational only, but could we have Andrew Giassi provide some comments here?
Yeah. Good morning. So I've actually got a presentation that supplemented the briefing paper, and I'm going to share my screen and highlight some of those slides. Can everybody see? Let me make sure I've got this set up correctly. Can everybody see that okay?
Yes.
Yes.
Okay, great. So good morning, distinguished members of the Bi-State Board of Commissioners. My name is Andrew Giassi, and as the Director of Safety for Bi-State Development, I'm here before you today to provide an update on the status of MetroLink safety for the 2019 calendar year. The Bi-State Safety Oversight Team is comprised of representatives from Missouri and Illinois that partner to provide oversight standards across both states. With me today from the team is Justin Sobek, Alexis Billingsley, Joshua Katz, and Jonathan Stavanovich. Today, we'll provide an overview of the Bi-State Safety Oversight approval documents, internal audit report summary, Metrolinx reportable event summary, and highlight the collaborative efforts with my office and the Bi-State Safety Oversight team. There are 3 federal regulations and multiple state regulations that govern the safety oversight of our transit agency. Together, the Bi-State Safety Oversight and the Office of Safety interpret the regulations set forth and implement into governing plans and procedures that we will highlight in this presentation. Our Bi-State Safety Oversight team approves Metro's Public Transportation Agency Safety Plan, Metro's System Security Plan, Metro's Emergency Preparedness Program Plan, all internal audit reports, investigation procedures, event investigation reports, and corrective action plans as a result of any of those processes. The Bi-State Safety Oversight team verifies Metro's compliance with a multitude of regulations, safety risk management activities, and importantly, the Bi-State Safety Oversight Program Standard Manual that I will highlight in forthcoming slides. One really important initiative is the incorporation of Safety Management System, SMS, into Metro's Public Transportation Agency Safety Plan. This initiative will ensure employee health and safety system safety is incorporated into every process at BSD. Metro's Agency Safety Plan was approved by the Board of Commissioners on June 25th, 2020. And then certified by the Bi-State Safety Oversight on July 16th, prior to the federal deadline of July 20th, 2020. Again, this safety milestone was a huge accomplishment, and I must commend my staff for their hard work and effort regarding this mandate. There are 4 sections to the plan that detail responsibilities, again, safety responsibilities by department, the processes in which we conduct hazard risk assessments, the Office of Safety's initiatives to assure safety throughout the agency, and lastly, how the agency communicates and promotes safety throughout all of Bi-State development. One critical implementation milestone of the PTASK is the employee training portion. The Office of Safety has collaborated with the Bi-State Safety Oversight to finalize Metro's Safety Management System awareness training. We are offering this electronically, and it is a company-wide requirement. Training link can be made available to any commissioner upon request. Let me know following this presentation. In 2019, internal safety and security audits were completed in accordance with the program standard, the Bi-State Safety Oversight Program Standard. Of the 8 audits, 3 yielded minimal findings and observations. The Office of Safety has addressed the findings noted in the report, and again, a new audit cycle will cover specifically Metro's adherence to its Public Transportation Agency Safety Plan. There are certain specific event criteria that have to be met for my on-call team to be dispatched to conduct a thorough accident investigation and reconstruction. The criteria are as follows: a loss of life, report of a serious injury, a collision involving a rail transit vehicle, a runaway train, an evacuation due to life safety reasons, and lastly, a derailment. In 2019, there was an increase of train collisions at vehicular grade crossings. Again, it's important to note that none were a result of defective equipment, but were a result of patrons circumventing the crossing gates. The increase is also due to the fact that some of the events that we investigated met criteria for 2 categories and were counted in multiple categories. Again, my team continuously puts mitigation efforts in place to try to reduce these events from occurring across the agency. The Bi-State Safety Oversight team completed their annual revision to its program standard for bi-state development, and changes included SMS implementation guidance, investigation checklist enhancements, and general updates to staffing and contact information. Our Bi-State Safety Oversight is an integral part of the safety oversight process. Team members work closely with my staff during a number of initiatives that include internal audits, event debriefings, facility inspections, vehicular inspections, safety certification for new projects or configuration changes, and drills and exercises to ensure system safety across the agency. Last topic to mention is our collaborative effort regarding Metro's pandemic response to COVID-19. Our state safety oversight provided many transit resources and guidance documents that were incorporated into our overall COVID-19 safety plan. That was a critical piece. Again, by state development, we value the safety of our employees, customers, and partners. Their protection is critical in all of our operations. I thank you for your time today, and if you have any questions, please do not hesitate to ask.
Thanks, Andrew. Does anybody have any follow-up to that for the oversight update?
Commissioner, can I just follow up very quickly?
Sure, go ahead.
So one thing, obviously there is almost an ocean of information behind this very brief presentation, but what's very important are the partnerships that have been built. Indeed, having representatives from both states present on the line today, fulfilling our statutory requirement to report directly to the Board of Commissioners. This is critical. Also, a defined role within internal audit represented by Gary Smith, actually, led through Angie in the interim right now to be sure that we also have some internal processes towards review. It's rigorous, it is detailed. There's been added expertise with the presence, for instance, of Mr. Barry. He contains a lot of expertise in the training area, and I need to commend him also on the progress that we've had. Indeed, I think they had a meeting yesterday with our state partners for almost an hour to be sure that we are all lined up. The good news, actually, in this case, is there is no news. So that's how we stay safe. We're going to continue to stay vigilant, and I appreciate the commissioner's time.
Thank you, Talby. Unless there's anything else, I'm going to move down the agenda to items number 12 through 15, which are reports prepared by our audit department, and they are informational only, including the fourth quarter fiscal year 2020 follow-up summary, the fourth quarter fiscal year 2020 status report, the second quarter calendar year 2020 state safety oversight status report, and the Treasury safekeeping accounts audit ending in June 30th, 2020. And we've got Angie here again. So if anyone has any specific questions, go ahead. I think I actually have a question as well, but let me find it. If anybody else, go ahead and go first. All right, well, I will go first then. It's actually about item number 12, and I don't know if it's so much a question for Angie, but it's the it's essentially these aren't paginated exactly, but it's item number 12 and just the first and second pages. And I guess I just see that the Gateway Arch and the riverfront are owe quite a bit of money to some of the other entities. And I know obviously with COVID, a lot of things are weren't anticipated, but I just wasn't sure what the status of those two entities was, if we thought that would start to improve, and kind of if not, kind of what are we planning, what steps are we planning to take there?
I can address that, Commissioner. So in the case of the riverfront attractions, so that is not good news. Obviously, the COVID and flood effects associated with the riverboat operation is very negative. That is an operation of ours that we do our best to run on a break-even basis, but with flooding and COVID and so on, that is hard for us, quite frankly, to achieve. So we will be requesting and we'll bring to the commissioners a true up regarding that. I have talked to our leadership about the need to run that operation, and that, of course, it does not have a basis in a ton of financial success. But that is an issue that I've brought up to leadership across when I have asked for budgetary questions, whether that was an operation that they wanted to see continue. So we're doing our best to run it, but it is true that right now the riverfront attractions are in a negative territory. I'll ask, for instance, Mark Vago to detail that a little bit more when we get to September's board meeting, if that makes sense to you, Commissioner. On the arch, however, the arch, of course, is an operation where that is part of the normal cycle, and I'll ask Mark Vago to comment on that as well at our next meeting, and that will be able to get trued up. But in the case of the river boats, it is not good news associated with the very real effects of both either flooding or with COVID.
Yeah, and that's fine. And I would just ask that someone be prepared to speak in detail on this, with such as where we stand and kind of what our plans are. That's fine. I noted that kind of stood out to me in the figures. So any other questions for items 12 through 15 for the Angie or any of the staff while we've got them here?
I just have a follow-up question to that, actually, Justin, which is and I don't know if Angie, you can answer this, or Talby should, but when it says that entities owe money to others, such as Gateway and Riverfront, in essence, does that mean they owe it to Bi-State?
Do you want to answer, Mr. Roach, or do you want me to answer? Or?
Go ahead, Angie.
Okay, I mean, they don't, accounting doesn't, and Mark can speak to this too, accounting doesn't break it out specifically to whom they owe it to anymore in their account. So yes, I mean, the ones, obviously, you can see transit has the biggest balance. So most likely they owe it to transit, helped fund their cash needs during that time. So that's essentially who they owe it to, because transit, as you can see, is owed $8 million from the other entities. So it's to transit mainly that they owe it to. And then the workers' comp and the casualty, that's just how we handle the claims and how it gets funded between the different companies when the claim checks are actually processed. So yeah, owe it to transit, but it's, I mean, Bi-State as a company as a whole, but this is just all the intercompany transactions.
Right. I just wanted to make sure that we didn't have a lot of outstanding invoices from vendors outside. That
no, this is all internal.
Basically, we owe everybody
Right.
owes transit.
Correct.
That's right.
Mark, if I'm speaking incorrectly, speak up.
No, and I think the only thing I would add to that, Angie, is the reminder that it's transit where all the bills are paid out of, and then everybody reimburses transit for those payments.
Thank you.
Always a lag.
Any other questions? Okay, again, there's no vote necessary, I believe, because that was just informational only. Agenda item number 16 is the pension plan, 401k, retirement savings program, and OPEB trust investment performance update as of June 30th, 2020. Chuck Stewart, could you provide comments, please?
Thank you, Commissioner, and good morning, Commissioners. I'm going to provide you an update on our investment performance for our pension plan, our 401k, and our OPEB trust. I want to set the tone for this, basically giving you a little market overview. The market has been down and the market has been up, as usual. That's pretty standard for the last couple of years. As an example, the S&P 500 was down as much as 19.6 in the first quarter of 2020, and up as high as 20.5 through the second quarter of 2020, for an average of about a 3.1% loss in the S&P 500. I want you to take that forward as I talk about these funds individually. I'd like to start with the 401k savings program. A little background on that. We have 856 employees that are in this plan. The average referral rate is 7.7% of salary. The average account balance is $71,000. Now, this is primarily salaried employees, but since 2013, 2014, we've also had IBEW employees in it, and of course, we have our Colorado employees. As of June 30, the assets were $64.9 million, down from 65.8 at the beginning of the year. We had a $1.7 million investment loss, and we've had lots of different ins and outs during that period of time. Most employees are investing in the T. Rowe Price life cycle funds. Approximately 30% of participant monies in those funds. And another note is that there were 19 CARES Act distributions from the fund, totaling $227,000. The good thing is that none of those individuals withdrew totally from the fund. They took money out that they needed. They continue to make their normal contributions, so they're still in. Nobody got out, so that's a good thing. Any questions on 401k before I move on? Okay. I'd like to talk about the salaried pension plan now. Putting this into perspective, all of these trusts are basically, they're funded by either contributions from the company, employees, or investment earnings. So investment earnings are a very significant part of keeping these trusts healthy. So as of 6/1/19, the salary pension plan was 85.3% funded. In order to maintain that, giving an understanding of what the withdrawals will be, the expected, the actuarial rate of return on the plan is 7%. Our actual return for the first 2 quarters was a minus 2.9%. So that's a stretch, that's a strain on the plan at this time. But if things happen like they did last year and the year before, hopefully we'll recover before the year is over. As of June 30, the total plan assets were $81.4 million. Any questions on salaried? Then I'll
sorry, Chuck, you said 86%. What's kind of our standard benchmark there?
Well, 80% is a reasonably managed fund.
Okay.
80% is the benchmark.
Okay, so we still have some cushion there. Okay.
We have some cushion.
All right. Please proceed. Thank you.
Okay. So on IBEW, as of 4/1/19, and again, these funding ratios are from last year's actuarial reports. We will be getting new actuarial reports in the November time period. So as of 4/1/19, IBEW was 97.9% funded. And that's a special situation. We had an agreement with IBEW. We put in more, they put in more because they wanted to be at 100%. Okay, so we're staying around that. As of June 30, total plan assets were 6.3 million. So it's a pretty small fund, pretty small number of people involved in it. Year to date, our performance is a plus 0.2% in terms of investment earnings as compared to the 7% actuarial rate of return that we are trying to achieve. Any questions on IBEW? Okay. 788 pension plan. So as a 4/1/19, 788 was funded at 67.1%. So if we have a problem fund, that is the one. It's a mature fund. We have almost as many people retired as we have people contributing. So there's a cash flow issue all the time, more money going out than coming in. So therefore, investment earnings are just that much more important. The actuarial rate of return is 7%. The portfolio actually declined in the first 6 months, a minus 1.3%. Any questions about 788? All right, then I'll wrap up with the OPEB trust, other post-employee benefits. This is basically where we reserve money for retiree medical, future payments in that area. Our OPEB liability at 6/30/19 was $100 million. Our market value is about 40.5 million in this trust fund, so we're right around 40%, 40.5% funded. Our 6-month earnings were a minus 3.1%. And again, our actuarial rate of return is assumed to be 6%. But this is a very long-term fund. We're funding out for the next 20 years. So actually we should get kudos for the amount of money that we're putting aside in anticipation of that future liability. So that concludes my report on the performance updates. I'd be happy to answer any questions that you might have.
Anyone have any questions? Well, thanks for that update, Chuck. And I'll make my same dumb joke again, but I don't miss the E-Trade 6-month printouts here. But I use them for my Robinhood day trading, but I didn't always need them for the updates. But we appreciate you being very succinct and giving us the core facts here. So. But I think we're keeping you around for number 17. The next agenda item is an update on risk management insurance program. And we've got you again, and we've got Kathy Britton, if you don't mind giving us a little update on this.
Okay, so Kathy Britton is going to give that presentation.
Okay.
Good morning, everyone. I'm here this morning to provide an update, an informational update on our bi-state development risk management insurance program. Bi-State is self-insured for liability, which includes vehicles, rail, general liability, and we also self-insure workers' compensation. We do insure our property program, which includes the buildings, the assets, and the rolling stock, the buses, the LRVs. These are, and then there are separate primary programs, insurance programs for the airport, the riverboats, and the tram operations. So all insurance renews on 7/1 with the exception of a fiduciary liability policy, which renews on 4/1. We work with our insurance broker, who is McGriff, Siebels, and Williams here in St. Louis. So we typically market the coverage depending on the market conditions. We do take advantage of multi-year programs and rate guarantees when we can. So this year, by far, has been the most challenging and difficult year that we've seen in quite some time. Some of the reason for the increases that I'll explain include industry high losses, aggressive litigation trends. These have had adverse results and are driving the insurance premiums higher, and tighter capacity. There's fewer markets out there writing insurance. So, and this is primarily in the excess casualty insurance, but we also are seeing impact of COVID-19 pandemic, which is has affected coverage terms and the property market as well. So I'm not going to go through my entire presentation this morning, but I do want to start on tab 17, the attachment 1, and on page 2. This is the insurance premium summary. So what I have here is last year's, which was fiscal year 20 premium. And then we have this year's premium, fiscal year 21. We have a percentage of change over last year, as well as we put in our budget for fiscal year 21, what we have done. And so we have the variance from the fiscal year 21 premiums to the fiscal year 21 budget estimate. So I'll start off with the liability premiums increased across the board. So any liability in any of our programs, we saw an increase. So I'm going to start with the, excuse me, the airport insurance. This includes liability as work comp. So this is a summary. We did see an increase. We anticipated it. So overall, over budget, we had about a 3 to 4% increase. The river boats includes the hull of the boats and protection and indemnity, which is their liability coverages. So there are fewer markets writing excursion business, and the Branson Duck boat has had a big effect on this market. So we are feeling the effects. However, on a positive note, we were successful in negotiating no COVID exclusions in this coverage this year. So that was a plus. So the package insurance is made up of, it covers vehicles for the Arch, the airport, and the riverboat vehicles, as well as the Arch Tram liability operations and an umbrella policy. So that saw a slight decrease under budget, slightly a 10% increase, which we anticipated for the liability. The excess liability insurance is where we have seen the most dramatic and have the most dramatic effect. We are on a public entity form, and what that excess insurance that has in it is coverage for public officials liability, which is also known as directors and officers. And it also has employment practices liability coverage in it as well. So that's where we get those coverages in the excess liability. For the past few years, we've been seeing fewer and fewer markets that will write public entities. We have been successful in years past because we have sovereign immunity in Missouri, and that caps our damages. However, in many states, not just in Missouri, but in many states, sovereign immunity is being challenged, as it is right now in the state of Missouri. So we are working towards trying to keep that going right now. So our primary insurance carrier is Trident, and they provide the first 10 million over our 5 million self-insured retention. They came back with an excellent quote this year. Actually, they came back and we are only 3% over last year on that particular layer. The difficulty became in the next layer, and the incumbent insurance carrier would not sit at that layer any longer. So we replaced them. This is a 5 million X of 15 limit, and we secured a new carrier, which was Lexington. They stepped in, but they would exclude public officials liability, employment practices liability, as well as our law enforcement legal liability policy. We have several liability policies that are underneath, and then they come up above. So they stepped in, but they excluded those coverages. So we had to find other carriers at additional cost to provide that and fill those gaps in coverage. Last year, we had a total of 75 million for all liability coverages. This year, the higher layers above 40 million would not include the public officials and the employment practices and the law enforcement legal liability policy. Also, there is a more defined communicable disease exclusion throughout the excess liability program. Therefore, not only did we get an increase of 112% over last year, but coverage has been affected as well. I've talked with other transit agencies, and they are in the same boat. They are having the same issues and seeing the same increases that we are. So I'm going to go ahead and go through all of these, and then if you have any questions. But the next line item on the summary is the excess work comp. This is a good example of where we have utilized a rate guarantee. So last year we entered into a 2-year rate guarantee. So in addition to a decrease in payroll, we were successful in having our premium go down in this line of coverage. And this is an excess policy that sits over our 1 million self-insured limit for workers' compensation. Property has also been difficult, but not as extreme as the excess liability. We had a rate guarantee on one of our primary layers on the property program. However, due to the airport fire loss, which exceeded $1 million, and we had a LRV derailment claim, we have seen an additional increase, and we lost our rate guarantee. So the terms and conditions on property were also affected. The airport arch and the Meridian garage had lower deductibles from the other property coverages that we had. So they went from a $10,000 deductible to a $100,000 deductible, which is the same as our other property with the exception of LRVs. The LRV deductible went from a $250,000 deductible we had last year to a $500,000 deductible. Also, 25% of our primary layer in our property coverage has now excluded strikes, riot, and civil commotion. So overall, the premium increased 33%, but we are actually only over budget by 6.25%. The last item on the summary are some smaller policies. Of these, the law enforcement legal liability policy saw the largest increase in these policies at 25%. We have had claims on that particular policy. Overall, these policies did come in under budget. So factoring industry high losses and 2 of our own large losses for property and the pandemic and civil unrest, our total insurance program is up 49% over last year and 25% over budget. So we have seen big fluctuations. We try our best to get to the market early to try to get out there, and we meet with any underwriter we can to sell our company to them, and we explain all of our safety practices that we do. We've been very successful in this. We've just had like kind of a trifold hit this market, and it's been extremely difficult. So that's kind of where we are this year. I wish I had better news. Last year we were successful. We were seeing the hard market last year. We only had a 14% increase last year. This year, it kind of hurt us last year because we were early in the market last year, and everything kind of downward spiraled quite a bit since that renewal. So we kind of got hit a little bit, a lot. So with that, I would like to, see if you had any questions or if I can help answer anything on this. One last point I wanted to say, when the river boats do not operate, we do receive a credit on our insurance. So with that, anybody have any questions? Yes.
I have one. When you talked about the excess liability insurance, and the large increase, you indicated that there were some issues with some of the policies under that which underwriters won't write anymore, and you included one which is of concern to me, which is basically D&O insurance.
Yes.
So where is that now?
So we have currently 40 million in coverage for that. So we were successful in filling those gaps with other insurance carriers.
Okay, I just wanted to make sure, because most of us don't want to get sued for sitting on this board.
That's right.
And if we do, we want to make sure we were covered. Okay.
Yes, yes.
And I also appreciate everything that you've done. It's terrible that these insurance rates are going up this high, but this isn't just this industry. I've seen it in my own industry as well. So just wanted to commend you for doing all that you're due to try to keep those underwriting, the coverage high and the underwriting rates low.
Thank you.
Probably the smallest thing I saw on here, but it made me ask. I see a small workers' comp column at the airport as opposed to other categories. Are they unique for some reason?
So a lot of the reason why we are separate out the airport, well, riverboat is a really specialized, but airport is as well. And we've always in the past have felt that they can't absorb a large deductible like the $1 million for the work comp. So that's why we have been successful in actually securing a work comp policy for Illinois. Now, normally when you're self-insured, all operations have to be included in that. But because we're in 2 states, we've been successful in getting a separate policy for the airport to keep to not have a big hit, such as the $1 million self-insured retention.
Okay, thank you.
Mm-hmm.
Any other questions? Okay, again, that was informational only, so no vote is needed. Our next agenda item is number 18, the quarterly financial statements, and this is the fiscal year 4th quarter, which ended in June 30th, 2020. I believe we have Mark Vago, who is able to speak on this.
Thank you, Commissioner. And I'm going to try and speak a little more qualitatively than quantitatively today. The numbers we do have are for the fiscal year end June 30th. They are not audited yet. Going through the business units, we look at executive services. They had a gain of $200,000. They have about $4.5 million, $4.7 million in the bank. They're actually in a fairly stable position at this point. They look okay. We look at the Gateway Arch. The Gateway Arch lost $218,000 for June. That's a little unusual for them. And again, it's being impacted by the COVID and the pandemic affected tourism in the area. Little less concerned. We did bring up the issue that they do owe. The Arch has about 20 million in the bank. It is restricted because it's tied to the National Park Service. But again, they have that to pay their bills. So again, even though they ran a loss this year, a small loss, they're in a fairly stable position as well. When we look at riverfront attractions, with riverfront attractions, I actually look at net income after depreciation because they are wholly owned and no one helps us buy our fixed assets like we do with Metro Transit, where the federal government is coming in and helping buy the capital assets. I look at the net loss after depreciation, which was $710,000. And again, as it's been previously mentioned, they owe quite a bit of money into that central pot of BSD money being owed back. They paid about $200,000 back in July, but they're flooding over the years, and particularly this year, and along with the tourism impact by the pandemic, they've really been hurt. So they're in a difficult situation. St. Louis Downtown Airport, they made $250,000 for the year ended June. And again, their revenue usually runs in a fairly stable position. So they had a fairly good year and they're in a good place. The challenge with the airport, and I believe this came out of that audit that you made reference to earlier, Commissioner, the intercompany audit, which is they don't have the cash reserves or the full list of all their capital projects. And I think Sally Bender brought that out of that audit. that's kind of looking forward. How are they going to fund their portion, the local match on those capital projects coming over the next 5 to 10 years looking out? The St. Louis Regional Freightway lost $285,000. There was some funding that was secured. That was secured after fiscal year end, so it didn't show up in the 20 numbers. It will show up in 2021. So I think we'll just watch that for the next year, but I think that those problems and those losses will probably go away, and I feel good about that. The Institute is, again, it made about $7,000, but they're in the process of wrapping up their kiosk project and closing that out. And then Arts and Transit was right about at break even, which was what you would expect. When you look at Metro Transit, they made about $18 million before depreciation. But the one thing to note on that is as we were coming down the stretch with the pandemic, we got $142.2 million in CARES Act funding, and we drew down just about $21 million in June to close out the fiscal year. So without that draw against that $142 million, we would have been running a loss of about $3 or $4 million in transit. So that's an important point to make, that transit really was at break even or just below without the CARES funding that would have come in the way we were being impacted. I'm not going to talk too much more on transit. I know Jessica coming up has her operations report, and I'm sure she'll speak much more to that. When we look at the self-insurance funds, all three of them together lost about $1.5 million last year. But again, they have about $25 million in the bank. About $5 million of that is sitting in medical, which gets constantly refreshed because employees are making contributions through their payroll checks, as well as the other companies are putting in for their employees, their portion of the company paid. So again, I think there's enough cash reserves there at the moment that there's some stability, and I feel good about that as well. And that's basically my brief report, Commissioner. If I'm open to questions and can answer anything I can.
Any questions for Mark on this topic? Hearing none. Thanks, Mark. We'll move on to agenda item number 19, which is the treasurer's report from Tammy Fulbright.
Good morning. Please turn to tab 19 and you'll find on page 3 a summary of the fourth quarter cash and investments for FY 2020. I want to start by noting when we make our investments, we're focused on preservation of safety of funds, liquidity requirements, and the rate of return. And in times like these principles are very important and very much understood. As a reminder of the 2008 financial crisis and a pandemic like COVID-19, the market can be impacted very quickly. When COVID started impacting our revenues, we continued to be able to meet our obligations because we had liquidity available. Other agencies were not necessarily in that situation. As the Fed began to lower rates, our February investments were $46 million. We bought a combination of bonds and treasuries at that time. Most of those bonds have been called, and all of these things have impacted our rate of return. So when looking at page 3, about halfway down the page, you'll see trustee directed funds. And if you go to the far right, in April, you'll see we had $192 million with an average rate of return of 0.55%. Going to the left, in May, you'll see we had $182 million with an average rate of return of 0.26%. And in June, we had $224 million with an average rate of return of 0.2%. Going down a little further, you'll see trustee directed funds were $59 million with an average rate of return of 1.1%. We do believe we'll be able to hold that average rate of return a little longer as these investments go out further. The one thing or a couple things I want to note as we move forward in 2021. In July, our appropriation process went really well. We had approval from the city and the county in July, which meant we got our sales tax funding in the trustee account and back into BSD in July. This was a very important thing for our cash flow. And as I mentioned, the Fed lowered rates down to 0 to 0.25%. So this will continue to impact our investments and our rate of return. This week, we did an investment bid and we purchased $15 million, which consisted of collateralized CD, US Treasuries, and agency bonds. And the average rate of return for that investment bid was 0.18%. So we know in the future months that our rate of return is going to be impacted, but we will continue to look for ways to try to improve on that rate of return. And that's my report this morning if there are any questions.
All right, hearing none. Again, that was informational only. So I will move on to agenda item number 20, our quarterly procurement report. And this topic will be handled by Greg Smith. Greg, are you available?
You're muted, Greg.
Yeah, we can't hear you. Hey, Greg, you're muted if you can hear me.
I think we're on now.
All right, there you go.
Okay, sorry about that. This is a procurement activity report. Good morning. Fourth quarter 2020 non-competitive procurements totaled $4.7 million, or 15.4% of the total purchase order commitment volume of $30.4 million. On the 12-month rolling average that we also track, the non-competitive procurements total $19.8 million, or 14.5% of our total purchase order commitment volume of $136 million. Any questions?
I don't hear anything else, Greg, or just was that it?
Nope, that's it.
Perfect. Again, informational only. Agenda item number 21 is a compliance and ethics update. And this is from Kent Swagler.
Commissioner Windmiller, Commissioner Zimmerman, and fellow commissioners, Mr. Roach, ladies and gentlemen, as well as our bi-state team members. Very excited to present to you today. Originally, this would have been done back in March. Obviously, we had hit with the COVID pandemic. Typically, I give you an annual State of the Agency presentation. Since many of you commissioners are relatively new to the board, just to give you a quick brief background, we are now 2 months into our 10th year of the Corporate Compliance and Ethics program here at Bi-State. And I've maintained my professional certification in that since 2012. Part of my roles, in addition to being the compliance and ethics officer, include being the records retention administrator, the information security administrator and officer for the agency, a HIPAA privacy officer, along with our director of benefits, Dave Tobin, and many other roles, including the overall primary investigator and system administrator for our compliance and fraud helpline, and our electronic policy and procedure system. So with that brief background, I will start stepping through my slides. Overall, for our compliance and ethics compliance requirements list, this was an initiative that I undertook to give the agency, to give senior management, to give all of you an overview of how do we stand overall for compliance. And it is a two-roll document. I know you can probably not read this, but this is 44 pages on ledger paper that represent nearly 350 different compliance requirements throughout the agency that I do an annual review on every year. Part of my mantra is not duplicating efforts. So such as when the finance division goes through their annual external audit, I certainly do not replicate that. I wait for the results of that. So we have completed that review. Part of that document also includes any reporting requirements and hyperlinks to all the direct statutes and regulations so that we can directly refer to that. This document, through external audits and reviews by the FTA, the IMG, has been deemed exemplary and has been taken with them to be used as a standard for some of their other transit agencies. So far this year, we've got issues identified with 23 requirements. Most of those are on hold from the recent triennial audit with the FTA, but most of those deal with inspection completion and documentation updates. As part of my annual review, I also conduct an internal self-assessment of HIPAA requirements throughout the agency, and there were no findings there. So overall, we stand in a very good compliance standpoint. With employee training, policy compliance update, we've revised significantly a lot of policies and procedures. And as well, all of these results would not be the good findings that we have without many of my team members here at Bi-State to help me with this effort. Just to give you an overall picture on our required readings of our policies and procedures. Part of the reason that we have an automated system, an online system, is that we can do internal reviews for any laws, statutes, regulatory, as well as any organizational changes within the agency. In the past, we had people not reading their policies. They were not configured properly. And working together with all members at each department and division, now we complete them in an average of 6 days. We also, these are critical in terms of any type of outstanding disciplinary actions, litigations that may result from suspensions or terminations. This is part of the presentation that I presented back at the 5-year point of our program to give all of you essentially a 5-year return on investment of the compliance program. And since then, since 2011, we have, as a result of having our training, our policies and procedures, and required readings, we have used those as key for any of our separated employees. We have those records so that it helps us avoid future litigation costs. And as you can see, since 2011, we've alleviated nearly over $4.5 million in litigation costs using an industry standard, as you see there. In terms of completed training, I'm responsible for completing not only compliance and ethics training for all of our new employees, but also transit-oriented workplace violence prevention. We do this for all employees here. I also provide refresher training that employees can access online through our policy management system and eventually through our learning management system. Likewise, I have focal points at all of our divisions and departments to help me with information security and records management for their departments. That we conduct this training, we're on target. It'll probably be more towards the end of September because of the continuing pandemic and remote working from home, some challenges there from a training aspect, but overall, we've trained a lot. I've trained a lot of people this past year, and that will continue in the years ahead. We also had internal audit do a review of our compliance and fraud helpline. The overall assessment showed that it is compliant with industry standard best practices. Part of the effort and the recommendations which were needed to be done, we have updated, as you probably can attest. Back in January, we signed off on the revisions to board policy chapter 100. We've completed an instructional book. Updated that. I had that, and it's part of my training program for any of our report investigators and senior management that access our helpline. And we also have an internal department process memo for managing system administrative management for our Ethics Point helpline. And part of that also was to transfer the reporting and the tracking of our transit operator assaults that over to our public safety department, since they are tracking a multitude of different incident events that occur, not just assaults to our operators, but also our customers and the surrounding public. So overall, when you look at the agency, we are doing very well again this year from a compliance standpoint. Again, these results would not be as good as they are without the key inputs and the timely inputs from all of my fellow team members here at Bi-State. Does anyone have any questions?
Thank you for that presentation, Kent. We appreciate it, and thank you for keeping us up to date on where we stand with our ethics training and compliance. I didn't hear any questions, so And again, that was informational only, so I'm going to move on to the next agenda item. And that will be our operations report from Jessica Medford Miller.
In here.
Jessica, we cannot
Good
hear you.
morning. Good morning. I'm gonna just work to share my screen with you. I have a few visuals for you this morning from the operations report. I don't want to, can y'all see that?
Yes.
Okay, great, wonderful. So I don't want to review the operations report today in entirety, but what I do want to focus on is our fiscal year 2020 in review. This is the first time we've come together since the fiscal year ended on June 30th. I want to talk a little bit about our performance and how we're going to adjust in FY21 based on the incredibly unique year that we've had in 2020. I will provide also a brief update on our COVID response. I'm going to talk a little bit about service recovery, and then looking into FY21, our strategic goals and some changes that we've made to the Metro Transit Senior Leadership Team that I want to share with you. So with respect to our 2020 fiscal year, we started out still in a period of ridership loss. As you'll recall, we began our 2020 calendar year with ridership growth for the first time in 5 years. Now that was quickly erased, of course, by the beginning of the COVID pandemic in March. And so we ended the FY20 fiscal year at 30.3 million passenger boardings, and that is 17% below our prior fiscal year. And so ridership, restoring ridership and maintaining a sustainable service level are going to be among our primary focal points for 2021. We do have July data, by the way, and our July ridership system-wide is down about 52% compared to July of 2019. So a significant clip. We're continuing at roughly that same rate. We're a little more impacted on MetroLink than Metro Bus. Call a Ride, we're down just about 22%. So we've seen significant resurgence in demand from our paratransit customers, most of whom, of course, use Metro Transit for all of their trips on Call a Ride, but we are still seeing diminished demand. We have seen return of many of our regularly scheduled trips to places like sheltered workshops. Now, we operated a reduced level of service in FY20 relative to our original budget, and that's associated with COVID. And as you know, we've gone through many iterations of reduced service, gradually restoring it. Because of that, we did end the year below budget, which is wonderful, of course, because we ended the year below budget with respect to our revenue as well. We're working now, and Mr. Roach alluded to this earlier in our conversation this morning, we're working to take a look at FY21 and how we will operate and respond to ensure that we can sustain our operations and our organization through FY21 and beyond. Just a little bit about our COVID response. Since we were last together, we are continuing all of the mitigation strategies, the cleaning, the employee rest, changes to our schedules that have been implemented in recent months. We've also added thermoscanners at our operating facilities, and we're using this technology to take employee temperatures before we all report to duty. Back in July, we hosted a mid-action review with all of the senior leadership associated with our Emergency Operations Center. We're taking stock mid-course. We're making changes to our strategy, to our organization, giving team members relief to ensure that we are spreading both the burden and the developmental opportunity associated with COVID response across our entire leadership team. We've just rolled out personal protective equipment vending machines across our facilities, and this is a good measure. It's helping us save personnel time and helping to ensure that we have PPE readily available to all of our team members. This is simply a vending machine with equipment like masks, gloves, and sanitizer that's accessible with the swipe of an employee badge. And finally, next week, I'm delighted that we're going to be able to roll out rapid testing to our employees. This will give employees who may have had a workplace or an outside of workplace COVID exposure, who present themselves with a temperature or who may be experiencing COVID-like symptoms, with access to a PCR test, and we would receive those results within 48 hours. And we hope that this will allow us to continue suppressing possible cases of COVID-19 amongst our workforce. To date, amongst our bi-state development team members and contractors, we have had 90 positive cases, including 2 fatalities. Like the communities we serve, our team continues to be infected by COVID, and we're working to support them and prevent this to the greatest extent possible. We're moving through a number of impacts to our operations and service because of COVID. We've had a number of different service changes. Metro Bus and Metrolink continue operating just a little bit below 80% of pre-COVID levels. And Coloride, of course, is demand responsive. And as I said earlier, we're providing a little more than 80% of normal Coloride service. So right now, and moving through FY21 and into FY22 as well, we're going to be focused on restoring ridership to this system. Never in recent memory have we lost so much ridership in such a short period of time. We're continuing to monitor demand, which looks very different now than it did prior to COVID. Who's traveling, where they're traveling, even times of day have changed. We're working with stakeholders like employers and universities to ensure that the service we're providing meets their needs, recognizing that their employment schedules, their class schedules have deviated from normal. And our planning team, I think, is doing a great job working alongside consumer engagement to try and keep a thumb on the pulse of what's happening in our communities. So we'll continue focusing service delivery based on this revised demand, also based on our available personnel resources and based on the likely available funding that we have to us. This is an opportunity also for us to look at how we do business and the technology and the tools that we use. We know that industries across the country and the world are implementing new technologies and business strategies in response to COVID. We've been working on things like fare collection for some time now, and the impact of COVID has caused us to accelerate delivery of technology like mobile payment. So we rolled out a mobile payment pilot program back in June. We'll come before this board in the near months to present a consideration for a contract for continued upgrades to our fare collection system to include a sustainable mobile payment option and electronic fare payment. We're continuing to use cash, but we've pulled back things like our paper transfers, and we know that we are limiting the spread of COVID between our operators and customers because of that. And this is a measure that has received strong support from our Metrobus operator team in particular. And so I aim to roll out some options that we can use in the long term. We're communicating with our customers and the public too. We are in constant communication about the strategies that we're using. And we're also having a two-way conversation about how our customers and potential customers perceive that we're performing and what they expect of us. We actually have an online survey out right now that's scheduled to close at the end of the week that's asking customers or former customers about their intention to ride, about what it will take to get them back on Metro Transit, and what they expect from us. And we're going to be using that as one of our guideposts for our recovery and ridership restoration programs moving forward. And we're also working to bolster some of our existing relationships with entities like employers, major universities, and other institutions across the St. Louis region to co-brand and continue to demonstrate confidence in Metro Transit and to emphasize the important role that transit is playing in keeping the St. Louis region moving within this crisis and beyond. And then finally, we have to sell our service now more than ever. So we'll be focusing on sales and marketing campaigns. Some of those fare collection strategies I mentioned are going to help us deliver things like employer-based pass programs that we haven't historically been able to offer. I very much look forward to that. Programs like the U-Pass have become the bedrock of our ridership and passenger revenue base, and we need to expand other opportunities like that in order to have a sustainable ridership and pass rev base. That concludes my COVID recovery update. I want to shift now to talk about where we're going strategically with our operation and with our capital programs. In the beginning of FY20, the transit team established a set of strategic goals, and we've achieved a number of those goals or contributed to them in FY20, even in spite of moving through this crisis. Our primary focus has been for a number of years, growing and sustaining ridership. I'm delighted that we rolled out the update of Metro Reimagined in 2019. I think now more than ever, an emphasis of service design that's intended to generate ridership, offer faster trips, and more competitive mobility options is critical. We've continued to introduce new options, including back in the fall, partnerships with Lyft, called a transit network company that's helping us fill in those first mile, last miles. We've expanded our partnership with Lyft in COVID response time to help supplement markets where service was temporarily suspended. Earlier this summer, we launched our first micro transit pilot program that's continuing to operate. That partnership with VIA is allowing us to provide demand responsive service across Greater South County and Greater North County. We're also working to support St. Clair County Transit District in their rollout of a VIA partnership. Together, we're monitoring the successes of these programs, and I anticipate expansion of some of these innovative mobility solutions into the future to complement our fixed route network and help attract and sustain our ridership. Together, we have all been working to create a safer and more secure Metro Transit. We've made great progress. There's work ahead of us. We have a number of capital programs in FY21 through 23 that we look forward to implementing that are explicitly designed to create a safer, more secure system, including upgrades to our camera systems, continuation of access control measures at our MetroLink stations, and safety improvements at our MetroLink stations and our Metro bus transit centers. A focus for any transit system, especially a large multimodal system like Metro Transit, has to be maintaining efficient, safe, and reliable service. We are industry leaders in vehicle maintenance and service reliability. We're also an aging transit system. MetroLink is 27 years old. We've also in recent months had delays in the production schedules of a number of our buses. So looking ahead, you're going to see big changes to the Metro Transit fleet. We're continuing on the deployment of our battery electric bus program. In fact, in just a couple of weeks, we will visit the production facility in Georgia to evaluate our 60-foot battery electric buses, which we anticipate beginning to receive later this year. We have an active construction project at our Brentwood Metro Bus Garage in partnership with Ameren, Missouri, to deploy battery electric infrastructure, as well as at our Broadway and Taylor Transit Centers to support those 60-foot buses once they begin revenue service in early 2021. We're evaluating our light rail vehicle fleet as well. We still have those original cars from when we opened 27 years ago. We will be making some big decisions about the rehabilitation and replacement of those light rail cars. These are decisions that this board will have to carefully consider as we move forward. Unlike buses, which are 15-year decisions, these light rail vehicle decisions will stay with us for much longer. And finally, we are working to repopulate much needed caller ride fleet. We have vehicles that we've just evaluated, and we look forward to finally replenishing that caller ride fleet later this fall. We talk a great deal, as we should, about achieving financial stability, and this board took an active measure this morning with the approval of the IBEW collective bargaining agreement to level our expenses moving forward. Now that our financial situation has changed tremendously, we are looking at our anticipated revenues and our operating program with an aim of balancing our costs against our likely revenues. That's going to include moving forward adjustments in our service level. It's also going to include taking a look at the composition and the function of our team. We have opportunities to broaden some of our roles and responsibilities so that we can all focus on the new reality and move the agency forward out of this crisis. One of the things that we must focus on in order to achieve all of these goals and make significant investments in the transit system is to engage and support our team members. Oh, can you see the screen okay, everyone?
Yes.
Just got a message. Okay, good. So we have a team of nearly 2,000 Metro Transit team members, over 2,500 by state development team members Moving forward, we are going to have to make investments in their training and development, especially as we contemplate changing roles, and especially as we plan for succession within our organization. Like many industries, we are faced with the near-term retirement of a number of our team members. As I said, Metrolink is 27 years old now, and all of our Metrobus facilities were constructed between 1983 and 86. Many of our maintenance and operations team members joined us back then and are nearing retirement age. So we'll be spending a great deal of effort focused on succession planning. So we've had a strong year. It's been a difficult year, but we have important and challenging work ahead of us. We look forward to working with this board to advance some of these exciting capital programs, to continue making some pretty significant and often rapid changes to our operating profile in response to our current reality. In order to achieve this strategic vision, we have to have the team that is organized and focused, developed and empowered to achieve those goals. In the last couple of years, I've made a number of changes to the Metro Transit organization, and effective this month, we've made a number of new adjustments to that team as well to ensure that we've got the right people and the right talent in place to achieve our goals in the near term, and to ensure that we are positioned to continue having a strong team beyond 5 years from now. Earlier this month, we welcomed 2 new team members to the Metrobus leadership team. Mr. Melvin Barkley is supporting General Manager of Metrobus Operations Trinice Winter as our Senior Director of Metrobus Operations. Mr. Barkley is overseeing all of our field team members. We're delighted to have him. He joined us most recently from Atlanta, where he was working as a contractor, and he has jumped right in to assume the leadership role for field operations. Mr. Bertram Desha has joined us from Dallas Area Rapid Transit. He joins us as Metrobus Senior Director of Metrobus Service Performance. Mr. Desha has also jumped right in and is working to continue moving that Metrobus transit team forward. We have undergone quite a renaissance in both the way we deliver service and the way we engage our team members, and he's going to help us get there. Effective just last week, we made significant adjustments to leadership within Metrolink operations, vehicle maintenance, and transit asset management. As you recall, back in February, Mr. Scott Grott, who was our long-term general manager of Metrolink, retired. Mr. Grott was responsible for Metrolink operations as well as Metrolink maintenance of way. That's the team that maintains all of our Metrolink stations, our right-of-way, our catenary systems, and our signal systems. I've made the decision to place all of Metrolink operations under the charge of General Manager Martin Gulley. Mr. Gulley is an accomplished team member. He has been with our organization for 28 years. He was most recently Senior Director of Metrolink Operations. He has also held leadership roles within the Metrolink Control Center and with Metrobus. Mr. Gulley is a strong leader. He cares deeply about our customers and the communities we serve, and I know he's going to succeed in this new role. It's a big time for capital programs within our organization. I've talked about some of the investments that we're going to be making in camera systems. Our FY21 through 23 budget includes over $37 million in upgrades to our camera and communication systems across Metrolink, Metrobus, and Metro Coloride. We also have over $40 million budgeted for investments to our Metrolink stations, as well as planned maintenance. We have the upgrade and replacement of light rail vehicles, as I talked about. So tremendous responsibility for leading our capital programs right now. I've made the decision to bring all of our capital programs, inclusive of vehicle maintenance, Metrolink maintenance of way, facilities maintenance, as well as supporting functions, including our transit asset management program and our communications teams, our radio and our light rail systems communication teams, all under the leadership of an executive team member. And Darren Curry, formerly our Chief Mechanical Officer, has accepted this important role. Mr. Curry has been with Metro for more than 33 years. He is a very strong leader. In addition to his tenure with our organization, he also had a parallel career with the United States Navy. I am very confident in Mr. Curry and look forward to building on the achievements that he's had within vehicle maintenance and expanding that across all of our capital teams. Mr. Curry is also very focused on employee development and engagement, and employee development and succession planning is going to be especially critical for these teams moving forward. Darren leaves behind him a vacancy as our Chief Mechanical Officer, and that has been filled by Mr. Dale Schaefer. Mr. Schaefer has been with Metro Transit for more than 35 years. He was most recently our Senior Director of Training and Product Development. He also oversaw all of the vehicle maintenance programs in our Metro bus operating facilities. In his new role, Mr. Schaefer continues leadership of those programs, as well as light rail vehicle maintenance and paratransit maintenance in our main shop. Mr. Schaefer is about to head to Georgia to investigate those battery electric vehicles, and he is going to be tasked with overseeing the replacement plans of our fleet moving forward. So a lot of changes here at Metro. We are deliberately focused on delivering strong capital programs and operating programs that can help us restore ridership and provide the important quality service that our customers and our communities expect from us. This concludes my rather lengthy operations report, and at this time, I'm happy to entertain any discussion or questions.
I have a question, Jessica.
Yes.
So there appear to be three trends across the nation that are independent of St. Louis. They're just taking place nationwide that I would think are going to have an effect on Metro for some time. The first is no one's expecting the unemployment rate to get back to what it was earlier in the year for some period of time, which means there are going to be less people, unfortunately, needing to get to work. Secondly, more people are working at home, and many are saying that's going to continue on, that more employers are going to encourage some portion of their workforce to remain home. And the third is safety concerns, not so much in terms of the physical safety, but safety in terms of individuals being concerned about getting the degrees by riding mass transit. Again, that's nationally. So we've got these three trends. How are you preparing for, and each of them, of course, leading to a decrease in ridership, preparing for the future given the operation of these trends?
Sure. So Commissioner, you are absolutely correct. These are pervasive trends across the country, if not the world, and they are especially impacting transit at this time. So with respect to fewer people traveling, both because of higher unemployment and an increase in remote work, we know that moving forward over this year and next, we'll probably need to adjust our service downward so that we're providing the right level of service, no more, no less than that which is needed. We also have to make sure that service that we do provide is attractive so that people will choose to use transit, even while weighing concerns about personal safety, especially personal safety with respect to contracting the coronavirus or other infectious diseases. So in order to do that, it really is evaluating transit demand, responding to that with the level of service and the way we design and provide the service, continuing our preventative measures and really communicating about what we're doing and having a two-way conversation about what the community comes to expect of us. I expect our service footprint's going to look and feel different now and moving forward over the next year and a half than it otherwise would have had we not encountered COVID. So we're going to have to be nimble. We're going to have to respond. We have to still be here. We still have to maintain a strong team. It's going to be a team that looks different, and a strong system also going to look a little bit different so that we can recover from this in the end. And our strategy throughout the COVID pandemic has been focused on keeping team members and customers safer, continuing to provide the mobility that the region expects, and that expectation has changed, and then surviving this and being here on the other side to continue being a critical part and a critical service in the St. Louis region. So it's a lot of adjustments. It's continuing to evaluate our needs, continuing also to stay abreast of trends in the industry and our peers. And we've really been bolstered. And I've been so very helped by some of our peers and sharing their experiences, those who are where we're at or a little ahead of us, so that we can consider the adjustments we need to make to our team. This is an all hands on deck response to the team is doing well, and everyone is working in their own way to try and innovate and be responsive so that we can sustain the mission. We will have conversations moving forward with this board about things like service level and team composition, because we are going to have to change in the months and possibly years ahead.
Thank you.
Any other questions for Jessica? I had a kind of a question / request, Jessica, if you wouldn't mind. I don't need it now, but I'm interested in the kind of the Lyft usage and also the VIA usage and kind of how that folds into our route changes with Metro Reimagine. Could you or your team prepare some type of summary or more detailed update on that and just share it with the board? I certainly don't need it today, but just some point. I think I'm interested in it. I don't know if anybody else is, but that would be helpful.
We'd be happy to.
Thank you. If there's no other questions for Jessica.
I have a question.
Oh, go ahead, Herb, go ahead.
Yeah, Jessica, how soon will it be before those surveys you talked about that's going to be ready to raw material is what I'm interested in seeing?
Sure. So we can actually share that with this commission next week. The survey is scheduled to end on tomorrow, I believe. We use an online tool, so the data is very readily available once the window closes. And that's being led by Ted Zimmerman, our Vice President of Marketing Communications. So Mr. Zimmerman and his team can share that.
Thank you.
Any other questions before I turn it over to Talby for his report? Hearing none. Talby, the floor is yours.
Thank you, Commissioner. And I am intentionally going to be brief as we really tried to be operationally focused. Thank you, Jessica, for a thorough report. There's a lot of very exciting information, but I want to try to be very brief about what is the overall strategy to really kind of address Commissioner Postello's question. And that is what we are trying to push to in every corner is being a forward-facing organization that is anticipating what are the challenges that will be facing us in 10 months and in 20 months. So for instance, just to recap, remember when you hear Tammy Fulbright's treasurer's report, and she mentions that our budget was completed on time for the first time with our funding partners for the first time in several years. So that has the effect of the sales tax comes into us and we don't have cash flow issues. So what does that do? It's a fundamental financial management and a professionalism that allows us to exist as an organization on a more sound fiscal basis. The other issue is we're always moving to stability and flexibility. So for instance, having completed union contracts is also critical so that we know what is our trajectory and where are we going. So that's another issue of trying to create an organization that is forward facing. There are also another issue, as we've talked about budget and staffing, some of which we will discuss in executive session very briefly, that I've talked to you about as far as changing our organization so that it is nimble and prepared for these inevitable moves that we're looking at. So the real question is, how do we welcome our customers back? And when is that? Unfortunately, I don't know when that is. There are some unknowns, but what I do know is that we need to create an organization that is fiscally sound and flexible. We have embedded these principles into what we're doing. We're starting to see some evidence of that in, for instance, having cooperative contracts, policing contracts, in getting through appropriations and all of those issues. All of those things have been done. None of them are behind. And that creates a situation where we're prepared for the challenges that are coming. I want to be very brief, given a very thick agenda today, and that would conclude my report. Thank you.
Any follow-up or questions to Talby on that?
I think it's spot on your approach, Toby. I think that's what you need to be thinking about. Thank you.
Thank you.
I'll now move on to unscheduled business. Talby, are you aware of any, or does anybody else have any unscheduled business?
I am not, Commissioner.
Anyone else? Okay, Myra, would you mind providing us dates for future meetings, please?
Yes, the next meeting will be on September 25th at 8:30 a.m. and that is a meeting of the Board of Commissioners. The next meeting after that will be the Security Subcommittee meeting scheduled for Thursday, October 8th at 8:30. Following that will be the Operations Audit Finance Committee meeting on Friday, October 16th at 8:30 a.m.
Thank you for that. I now need a motion that this committee go into executive session for the purpose of discussing legal, confidential, or privileged matters as permitted under Bi-State Development Board Policy Chapter 10, Section 10.080, D1, legal, and D10, audit.
So moved.
Second.
We have a roll call vote, please.
Commissioner Winmiller,
Aye.
Commissioner Galladay,
Yes.
Commissioner Brown,
Yes.
Commissioner Beach,
Yes.
Commissioner Simmons,
Yes.
Commissioner Costello,
Aye.
Commissioner Zimmerman.
Yes.
Motion passed.
Commissioner Gully has been on the line since 9:30.
Oh, I'm sorry, Commissioner Gully.
Yes.
Just let us know once we're out of public view and in executive session.
Okay, we are moving to adjourn. Try it again.
It says we're live, at least on mine.
And we're ready. Thank you.
Thank you. This committee has reconvened to open session pursuant to board policy. No final action or votes will be taken in closed or executive session. Therefore, we have a few items that need votes. So first, do I have a motion to approve the minutes from the May 21st, 2020 executive session of the Combined Operations Committee and Audit, Finance, and Administration Committee meeting as a closed record?
So moved.
Second.
Roll call vote, please.
Commissioner Winmiller,
Aye.
Commissioner Galladay,
Aye.
Commissioner Beach,
Yes.
Commissioner Gully,
Yes.
Commissioner Simmons,
Yes.
Commissioner Costello,
Abstain.
Commissioner Zimmerman,
Yes.
Commissioner Brown.
Yes.
The motion passed.
Next, do I have a motion to approve the draft fuel hedging audit, on-call contract audit as presented?
So move.
Second.
Roll call vote, please.
Commissioner Gully,
Yes.
Commissioner Winmiller,
Aye.
Commissioner Beach,
Yes.
Commissioner Galladay,
Yes.
Commissioner Brown,
Yes.
Commissioner Costello,
Aye.
Commissioner Simmons,
Yes.
Commissioner Zimmerman.
Yes.
Motion passed.
Next, do I have a motion to approve the draft disadvantaged business enterprise audit as presented?
So move.
Second.
Roll call vote, please.
Commissioner Gully,
Yes.
Commissioner Simmons,
Yes.
Commissioner Brown,
Yes.
Commissioner Beach,
Yes.
Commissioner Costello,
Aye.
Commissioner Galladay,
Yes.
Commissioner Winmiller,
Aye.
and Commissioner Zimmerman.
Yes.
Motion passed.
Do I have a motion to approve the draft Cortex Metrolink station construction audit as presented?
Second.
Can we get a roll call vote, please?
Commissioner Costello,
Abstain.
Commissioner Simmons,
Yes.
Commissioner Gully,
Yes.
Commissioner Beach,
Yes.
Commissioner Winmiller,
Abstain.
Commissioner Brown,
Yes.
Commissioner Galladay,
Yes.
and Commissioner Zimmerman.
Yes.
Motion passed.
Well, does it? Because we had 2 abstentions from Missouri and Commissioner Johnson's not here.
We only need a majority.
Majority for a committee meeting.
Okay. All right. All right. Well, if there's no additional business, do I have a motion to adjourn the meeting?
So moved.
Second.
All right.
See everybody.
Yep. Thanks a lot, Herb. You take
Thank
care.
you, everybody.
See you later.